thank you again to the organizers, especially Oscar Borgogno, for having invited us and having conceived the possibility for startups to be here and introduce what they are doing in disrupting the financial sector. I'm really honored to be here, accompanied with and moderating a panel in which there are 4 engineers. So this is a first statistics that we see. That have decided to challenge, to work in companies that are challenging the status quo in different portion of the financial sectors. Let me say just that this morning it was very, very interesting to listen to the keynote speech of the Deputy Governor of the Bank of Italy that mentioned many times the role of data in the disruption of the financial sector. And therefore, as Bacon, Sir Francis Bacon said, "Scientia est potentia," and scientia here is data. Whoever has the management, the possibility to get access and analyze a huge amount of information in the financial sector can have a substantial competitive advantage. Today, I will introduce one by one our speakers, and I will ask them to present to do a very short presentation of what is their company dedicated to and what is the challenge they decided to tackle in the financial sectors. And I will start with Alberto Mussinato of Fabrick. Alberto is in charge of the business development of Fabrick, and therefore is the engine of the company. Alberto, please let us know what Fabrick is dedicated to. It's a pretty huge in terms of activities platform, and therefore I leave the floor to you. Thank you.
Thank you, Carlo. Thank you all. Thank you for inviting me here. So pleased to meet you. As Carlo said, I'm Alberto Mussinato, and I'm in charge of business development at Fabrick. Fabrick is an open finance platform, so we basically deal with a lot of things in the finance space, and clearly 3 most important elements for us are the part, of course, of data. So our business is managing data. The second part, very important for us, is exchanging data, so also means managing transaction of value from one point to another. And the third part we are managing is the part of the identity, so managing data and managing transaction in a secure way. Just a couple of words about the company. Hope you can see the screen.
Yes.
Full screen.
Full screen. Oh yeah, sorry.
Here we are. Okay.
Maybe you can change
fantastic.
slides with this.
So basically, we, as an open finance platform, spun off from an Italian banking group, a private one, the Cello one, in 2017. And our idea was to bring the new era of financial intermediation in Fintech, so evolving the traditional banking intermediation into financial technology. We did it by launching first a community, which is still alive and count for 250 Fintech, which is the Fintech district. And then we leverage the heritage and the capability we spun off from the tech arm of the bank in order to manage the part of payment. So as I said, exchanging transaction and values with a company called Axerve, which is a payment institution in Italy. And then we launch our open banking platform. So the convergence of these 3 elements is what we call the open finance platform. So you can see the part of banking, so the data part, the transactional part of the open payment, and then the third part, which is more ecosystem-like, which is based by giving the supply and the demand to the platform, so in order to let the platform works. Starting from the fintech district, one of the first questions we asked about data is we need an ecosystem in order to understand how to leverage data and how to work with data. In 2017, the fintech industry, at least in Italy, was still as it known. And so we decided to launch a physical and virtual place in order to gather all the community internationally and also locally to, as I said, boost the platform. Probably most of you know the economy of platform is based by supply and demand, so it's like a chicken egg problem if you're working in fintech, if you used to work in fintech in 2017. And so we decided to start by ecosystem, and we imagine to develop the supply, but then rapidly the fintech ecosystem become our mainstream of demand. The second part we developed, so it's the platform itself. So it's like what I'm in charge of. So I built it directly on the business, but also on the product side. And it's an open API platform, so a clear technical standard in order to allow data and software interoperability, in order to allow modular block to be bundled and unbundled to deliver or single services, such as one API in order to do a specific and to run a specific service, or by, like the Lego package, by bundling many API services to develop the use case you can see in the middle of the slide. As I said, we both have producer, which are on the bottom part of the slide, and also consumer. We classified in 4 main industry regarding the regulatory profile, and also the need they have to fulfill. The banks, of course, so we start by accompanying the banks in their innovation journey, and then we bring the technology which was mostly available inside the banks to other segments, such as merchants, corporate, and then, as I said, our main target, fintech. Nowadays, we reach more than 300 business customers, corporate business customers, and we reach some significant records in terms of connection across Europe, and also volume exchanged of data and of services exchange on the platform. Last but not the least, the traditional business. So the bank from which spun off launched an e-commerce system in 1996, so before PayPal and many other company. Unfortunately, it remains local, which we used to call Just Pay. And nowadays we are innovating this payment system in order to combine the capability of the platform to route all the data across the value chain, the payment value chain, in order to deliver a new proposition for global players who need to manage payment and collection. So let's move to the data. So these are the components of which the company is made. We basically use data in order to develop our open service proposition. So you can find here, we have many services. We clearly are a B2B player, so you will not see a Fabrick brand as a consumer brand. At least the Fabrick brands appears just where the regulation asks for to be there. And our idea is to bring these 3 elements I mentioned at the start in order to develop a superior edge in terms of data-driven model. Let's see how. We basically, with different services, such I mentioned, we are quite complex also in terms of business, are present in different steps of the data value chain. So clearly, we are able to manage the data source. So since data is very sensitive in the financial industry, we are able to recover trust data, also via our license, and payment data, so the first part. Then clearly, the second step we did, since we reach out and understand that the data gathering was too poor in order to be processed, to enrichment and cleansing capability. So data should be good enough in order to be exploited, and so the capability of taking raw data and transforming in something usable is something very core for us. Then we move it to the model. So since we have the fuel, we develop some model in terms of mathematical models and using AI, neural networks, in order to solve specific job to be done, such as the finance one, the scoring, the EML, the fraud, but also helping businesses. So leveraging our capability to, for instance, forecast a cash flow of a small and medium business. Then last, and that's the frontier in which we are working on, is developing use cases on top of the model. So it's kind of flywheel. And so we start from something very simple, but it was very a big issue, such as reconciliation. So matching the financial data with other data, such as the economic one, the stock one, so the one coming from the ERP in the company. And then moving to other B2C and B2B model in order to exploit the capability we develop with the model to give back the value of data to the user. Just a couple of number of what we manage so far. So that's some number. We are managing more than 400 million banking transactions, so the one you do when you are paying with your cards. We already are sharing via compliance shield model more than 30 players that are using our technology and our license to exploit this kind of data. And on the payment side, clearly we are processing more than 20 billion and more than 300 million transactions per year. So the combination of these two sources is for us one of the key elements for future development of open finance and also for bringing to market data services that the user can benefit more in terms of financial space, more than what is present so far. So, thank you, and I will pass the word to Carlo.
Thank you very much, Alberto, for this great presentation. I'm really impressed by the numbers because of course, we are not aware, I guess the audience is not aware neither of how much information is transacted every day, and the fact that there are already data intermediaries like Fabrick that are making sense of this data. I was particularly thrilled by the fact that you are enriching data in order to understand, to forecast, you said, the cash flow of an SME, or being able to better understand the market, not just a single company, which is something that is already done by by banks in general, but with other means, I guess, with just their own information. So in this respect, I would like to continue to present through the introduction of our panelists, leaving the floor to Tommaso Migliore. Tommaso is the CEO and founder of MdotM, a company that has raised in the last years very rapidly and got a lot of momentum in Italy and abroad in respect of the usage of information, a better use of information to anticipate and forecast what will be the stock market in terms of single stocks, and so it's another startup that is using data to anticipate, to predict any smart new product or service to be considered as that needs to use data. So Tommaso, let us know what is MdotM, how this project started.
Absolutely. Hi everybody. Thank you for having me. And hi also to my fellow panelists. So we're called MdotM, not an easy name to remember. Stands for my surname and the initial of my surname and the surname of my co-founder, MdotM. We founded the business 7 years ago in London, where we're actually based as our main headquarters over there. Who we are? Can you see the presentation? Yes. Full screen. Down in the bottom. Sorry. There. Fantastic. We're a fintech company, and we believe in science-rooted investment decision. Okay, kind of supporting investment decision through the use of data. We just happen to develop artificial intelligence because it's a better technology to work within a complex environment as it is the financial market. I'll tell you about more about that in a second. Who we in numbers? We are about 60 people between London, Milan. We have some people in Switzerland, and we're now opening up in the US as well. We believe, as I said, in science-rooted investment decision. What I mean by that? The company was founded by myself. I come from finance and econometrics. And my co-founder, who's a physicist and a professor in AI and data science applied to investing. And we combined our background to try to overcome some of the rigidity around econometrics, which is the math used to create any financial models. To do that in a very proper and scientific way, we actually also created a lab, which is called MdotM Lab, in partnership with 6 universities, where we conduct base research. Now, I always say this, to have one good idea, you need to have 20 very bad ones, unfortunately. So the lab is where ideas go to die. If something is interesting, it gets picked up and goes into our team internally where it gets developed. The team is composed of physicists, mathematicians, engineers, people with a background in finance, of course. Today, I'm going to talk to you about the latest product that we released, which is a platform that allows for autonomously integration within the investment process of artificial intelligence.
The world is becoming more complex every day, and financial markets are not immune to the explosion in data and information. Today, the main challenge of any investment professional is to sift through data and cut through complexity to make clear, objective, and forward-looking decisions. Now, imagine a technology that can access a deeper dimension of data and help you see through today's market dynamics. MdotM is introducing Sphere. We created a platform that allows you to combine your experience with state-of-the-art artificial intelligence. Our AI is trained to learn as a human would do. It uses millions of examples to infer non-linear cause and effect relationships in market behaviors. Every day, Sphere analyzes all listed securities, gathering information from macro, fundamental, and market dynamics, such as how a sudden hike in interest rates could alter risk premia, or how sector correlations could evolve in different scenarios. We blend all this with a daily analysis of market regimes and their forecasted evolutions to help you shape your risk and return expectations. Sphere brings customization to scale by helping you design portfolios in every aspect and integrate complex constraints, investment objectives, and views. Experience assisted rebalancing. Define how much to change your portfolio and where it should be headed. Our technology will do the heavy lifting and create adaptive portfolios that reflect potential changes in market conditions. Start integrating AI in your investment process with the most advanced no-code solution. Start integrating Sphere. Enter the future of investments.
So, as you can see, Sphere is what? Sphere is a platform that allows to integrate AI within the investment process. Now, of course, our clients are all institutions. Our clients goes from big banks, insurance company, large asset management. We work with institutions. So the target audience is very sophisticated investor who have to make everyday investment decision, and they use our platform to support their processes with the technology. But why is it revolutionary? It's revolutionary because every complex technology at the very beginning is developed and used by the same people. Okay, think about the beginning of last century, the Wright brothers. They were the one flying the planes. They were the one building the planes. Okay, if you fast forward to today, a fighter pilot doesn't even know how to build a plane, right? There's people who build the plane, pilots who fly the plane, and they can do things that nobody has ever done before. Now, if you think about financial modeling, usually the people developing the models were always the one using it, data scientists, quant people, whatever. Now, with the increase of AI and the increase of how to integrate an artificial intelligence, it actually happens that there are people which are developing a tool that gets used by someone else. And that's a really revolutionary element that it's happening. So why did we found the business? I do think it's important to understand where we come from, to understand where we're going. We founded the business because the financial market is becoming more complex. And this is happening because the economic system is becoming more complex, the actors playing in the game are multiplying, and this leaves everybody who's in charge of making investment decision with the feeling that it's well represented by this picture, right? You're standing in front of a painting, in front of a screen, and you struggle to capture the overall dynamics of the market. You feel that there's more that you need to know, and you struggle to get that. Now, artificial intelligence does represent an opportunity. But today, I want to leave you with two thoughts. First of all, what type of data is it really interesting to look at to create a model able to work within this environment? And how, in a nutshell, does it actually work? So first of all, we've been around for now 7 years, done a ton of research. You can go on our website, check it out. We produce a lot of research. And over the years, we created a matrix that we put predictive power and predictive horizon for the different type of data. So in the bottom corner, there is news and market sentiment. Even though it's very sexy, and the marketing side thinks, that makes total sense, from an investment perspective, it's white noise. There's very little information by looking at the news or looking at the Twitter feed to understand how to position a portfolio, whether it's single stocks or multi-asset. Maybe it's interesting if you're a trader, but meaning that you don't trade that many volume and you're just almost doing an arbitrage. But if you're investing, has no much value, that doesn't have much value. In the uncertain category, it's alternative data. Now, alternative data, what I do is transaction costs for example, for credit cards or satellite pictures. Now, even though it's interesting from a marketing perspective most of the time, but from a model perspective, I always say two things. If the data is really good, then you can have a very good model, very sophisticated model. If the data is patchy, not necessarily super coherent in time, etc., the model doesn't make much of a difference. You don't need AI to look through that. You probably need, a very basic model, something very where the control on overfit is super high, because garbage in, garbage out. It's the concept, right? So where there is actually a lot of value in data is actually the most structured data, macro data, fundamental data, balance sheets of companies, etc., and market data. There are millions and millions of data points every day that gets produced, and looking through those data, now that's where a good model makes a huge difference for the sheer amount of data that it can produce. Now, before I pass it on back to Carlo, I wanted to give you an idea on how an artificial intelligence can learn certain financial dynamics, okay? So to understand that, we had to ask ourselves, how do we make an investment decision, or a decision as a matter of fact, as people, okay? Every time in life, we balance two things, experience with data evaluation. I'll make a quick example over here. If I were to tell you, do you want to go to a Taiwanese restaurant tonight? You're thinking immediately, have I ever been to a Taiwanese restaurant? So you're thinking about your past. Maybe you've never been, so you're thinking maybe you've been to a Chinese, it should be similar, or maybe Vietnamese, maybe it's similar. So you're thinking different things. If I were to tell you, let's go to a French restaurant, you're thinking about French restaurant, right? Then I give you the name and the address, and then you check on Google, you check the reviews, and you check if it's good or not, okay? So when we make investment decision, how does it work? It's a similar thing, but now experience is what? Experience is years in the market, past market dynamics, past black swan events, okay? So it's different things that we've lived through in life. Then it's a matter of data evaluation. Now when it's a matter of making investment decision, it's macro data, fundamental data, market data, whatever. And this goes whether you're investing in the stock market or if you're investing to buy a house, same thing, okay? Now why am I stressing this so much? Because often when people think about artificial intelligence, you think, yeah, but it looks in the past. Okay? We look in the past every time. It's called experience. That's why when you graduate, you're not that good. And after years that you've been doing stuff, you become better. So when we developed our technology, we needed to incorporate those two key elements within our algorithms. So the experience part, we call it non-chronological learning. What we do is we work with macro data, fundamental data, and market data, so many, many millions of data points. But effectively, what we do is we go back in time, and we use the past in a similar way as a human would do. Rather than just remembering few things, though, we can leverage the power of data and extract a lot of examples of market dynamics, relevant market dynamics, that we can then put and collapse in one moment in history, today, and use neural networks to create clusters, area bubbles, that we can use to create a probabilistic view of tomorrow, a probabilistic view. But then we need to adapt, and the adaptability comes in large part because of two things, the continuous learning, and the other thing is what we call the regime analysis. Now, the regime analysis is what? It's a derivation, it's a different technique of machine learning. It's called HMM, Hidden Markov Model, a derivation of the HMM. And what we do is very fascinating, because we're asking a system, asking a software to define what a risk regime is and how it is defined. And we use that information to make sure that our forecast, our capability of understanding the world of today through the non-chronological learning is actually very much regime aware. So it's aware of the context of risk that we're living on today. Now, that's why we say that it resembles the human experience, because humans, what we do is we can learn from the past and we can adapt as things change. This is similar. Of course, the difference is that we can leverage a lot of data that the human doesn't necessarily is able to do. And all of this is wrapped into a platform that it's combined within the traditional ways of looking at the world. So that's why it's valuable.
Thank you very much for this great introduction. I would like actually to ask you about the sourcing of this information, because you talked about different types of data and mixing. I really like the fact that you want to mix the experience with the data. But tell us more on what is the sourcing of this information?
So sourcing of information for us is structured data. Okay, comes through a different data provider that we use, and we just. I do think that when you're really doing artificial intelligence, the interesting part is less of where the information is coming from, that data or that other data, but it's much more. Is my data set really a good describer of a certain moment in the world, right? So you're much more interested into having a good grasp on reality and say, look, but are my data really representing the world out there? And then you leave the model to use those data. So for us, data comes through Bloomberg, FactSet, Morningstar, whatever, the known databases. We use millions of data points. And then the interesting part is that then we needed to create a technology that was very transparent. So every time people ask us, okay, but how do you understand what the model is doing? The thing I say the most is, when you have to develop an artificial intelligence in a complex environment, don't build a monolithic thing, like a big thing, big technology with one input and then an output, and then there's just magic going on within it, okay? But actually build something that it's much more like of a chain, where the input gets, worked and then becomes an output. That output is an input for something else, and so on and so forth. By working with this approach, a chain, you can always understand where and why it broke down, right? You can always track down, improves the explainability, gives more transparency to the model, and allows you to really understand, are we actually having a grasp on reality? So it's a bit of a different approach to use of data for us, because it's less of let's try to find a crazy way to find a source of information, but it's much more like there's already lots of source. How can we extract the value out of this noise?
So organizing and structure them like building a plane, as you said, for pilots. I would like. I understood that there are some regulators in the room that already have some questions about this topic. So we might change. I had the idea of presenting all, but maybe since we have all this information coming out, thanks to these slides, I think it's better to anticipate, and then we're going to have a second round to all. So, and we give, of course, also to Alberto the opportunity to answer to more questions. So, if there is the microphone, we have already one question there, and okay. Okay. Yeah, for this presentation, for this two, for both of them. Yes.
I'm Edoardo Martino. I'm assistant professor of law and finance at Amsterdam. Simple question. Forgive me if it is a bit provocative. What's the alpha of your predicted investment strategy?
It's not provocative at all. I mean, for everybody in the room, the alpha is that unexplained portion of your return that you can struggle really to explain with a known beta, with a known factor, then you can say it's just the way you treat data and you interpret it to give you that overperformance. Now, we've been around for 7 years, raised quite a lot of money, so the numbers are pretty good, I'm happy to say. So it's tough for me to just give you one number, because what we created is not an algorithm, okay? But it's an investment methodology. It's made of different components, and you can actually use to extract different levels of portfolios with different asset classes, different level of risk. So it depends on what you're doing. I can tell you that on average, we increase the portfolio efficiency by 40%. So if you measure the expected return over the expected risk, so risk over return, basically a simplified Sharpe ratio, on average 40% better. Okay. In terms of how do we produce the alpha, which is probably also a potential follow-up, given the type of question, we're a strong believer of the concept of producing alpha by moving well within betas, okay? Which is often a concept of combining risk well together. That's all. I do believe that nowadays, with all the unexplained portion of your portfolio performance being produced and being explained by the known market factors from Fama French and so on and so forth, they already took away a lot of the understanding of why we produce alpha, right? So a big edge happens in two cases. Either you're arbitraging, so the alpha comes mostly because of liquidity or market presence, and you're able to squeeze an arbitrage. Or if you're a long-only investor, the true source of alpha should be being good at moving between betas. So for us, for example, we've been around for 7 years. We went through Brexit, the election of Donald Trump, COVID, the 2018, which was a particular market phase, and now a war. And our performance has been very consistent on how the model behaved, mostly because we were balancing risk and factors well together. And that ultimately is our source of alpha. Does it make sense?
That is based on a predictive model of distributed risk, right?
Yeah.
So it's backward looking.
It's backward looking, but we've been live for 7 years, so it's also live executed, live achieved.
Thanks.
Thank you so much, you both, for your presentations. I'm Oscar Borgogno. Currently, I'm a legal research officer at the Bank of Italy. I'll just point out that I'm asking these questions out of curiosity and not related to my job. But as to the first presentation, I'm just wondering, would you define your business as a data aggregation business along the ways of Blade in the US? I don't know if you know the operator. I mean, it's pretty big. There were concerns in the previous sessions that dealt with open banking and competition, that basically Blade is emerging as a monopolistic technology platform in the US market, and everyone was wondering why this is not happening in Europe. And then I'm wondering, do you want to be the new Blade here in Europe? But that's how you're working. And then I have a question for you. It's a much more simple question. Basically, your service, do you sell your service as a kind of a subscription to your clients, or is much more like you take a share on the profits your clients make? I mean, do you define yourself as a company that sell a service, or the company that take a risk together with the client? I mean,
should we go? Shall I start? Okay. It depends. It depends. In general, where we're headed as a business with Sphere is to be a support to the investment team. But the reason is very simple. The world is becoming more complex, and at the same time, the marginality within our industry is going down. So in any world in which the complexity increases and marginality decreases, the only thing that can save you is technology. Okay. Now, to believe that every company has the strength to put together the team, the R&D process, the R&D culture, the process to have these people happy to work with you, it's really doesn't make any economic sense. So where we see our greatest opportunity is to be a partners of this institution that can use and leverage our technology, and then on top put their own expertise. So we started being more like taking risks together, and we're now evolving into still doing a little bit of that, but also being their go-to solution to implement AI at a way cheaper cost that would cost for them to develop, and at a much greater quality. But leaving always the space, as Carlo said at the beginning, for them to collaborate. Because also, when we talk about AI, we always think, okay, the machine is here to take our job. And I always, explain this thoroughly. The machine does not get bored, doesn't get distracted looking at your phone, while somebody's speaking at a conference, okay? It doesn't do that, it delivers. But the human can surprise. So there's a good value into combining the two elements, if it makes sense. Delivery and the capability of doing something completely different. And that's why we also believe that the future is really quantamental. Whereas if you come from the investment world, it's either you're a quant and you have your models to do your own things, or you are a traditional investor and you want to look at the manager in their eyes and see, am I going to go buy Tesla this week or not? We believe that investment decisions should be science-rooted, more science-rooted in the way to get to that decision. And what's the best way to do it with an adaptive technology, right?
I will have a question later for you on this. So, Alberto.
Yeah, I'll take the one about Played. Of course we are a data intermediary. I would say there's in Europe the risk of seeing a Played, even if Played is entering the European market, probably it's lower. Since in Europe we basically had a different approach regarding the open banking space. Since the open banking movement in Europe, some players start before the regulation push, but in Europe the open banking and the open data regarding the open banking movement start based on a regulation push. Because the bank wasn't obliged before PSD2 to open their data, and since Europe has established a quite strong framework, which is also common across 27 countries, or mostly common, it allows to be really, to foster competition. So there are many players which are playing this field, and so there's a quite it's easier to balance risk from a concentration of power in such player. While in US, played start from a market perspective with a very scarce regulation framework, both on the personal data, both on the open banking, so develop connection one by one by remunerating banks. And so basically it's a monopoly. And that's one of the elements you probably know, Played failed to merge with Visa. Because one of the issue to me, and also I would be happy to be both by one of these players, is that very big players who are intermediate, are managing transaction and data, such as the big card schemes, are looking to this company in order to bring in the data space what they did in the payment space. So bring an oligopoly of data intermediary also in Europe, and that's why big open banking companies such as Played in US, they tried, but also in Europe there's Tink, many other, also many led by Italians, are seen as very interesting from payment company which are managing the traditional payment world, because they are looking this opportunity to arbitrage the market also in data as they are doing in transaction. So the answer is yes. I think that in Europe it's safer respect to US in terms of framework and competition, but there's a risk.
Yeah, very interesting answer. And for what I understood, you are working on the sharing of data, and while Tommaso has the opportunity to gather and to share possibly the methodology of different players in using those data. And so we go on with Edoardo Degli Innocenti, who is head of business unit of Young Platform, talking about different kind of data coming from a a different technology. We talked this morning a lot about distributed ledger technologies and cryptocurrencies and all the challenges posed by to the traditional financial sector. So the floor is yours to introduce Young Platform.
Thank you very much, Carlo. Thank you, everybody, and for being here. And we are talking about the hot topic, cryptos and so on, so absolutely. My pleasure to have this discussion about data on blockchain, how we are leveraging data, how we are using data actually to deliver better services. Young Platform is the leading crypto exchange, Italian crypto exchange, by the way, because we have our headquarters here in Turin, so I'm really happy to be here talking about a very fast-growing company because the name says a lot. I'm one of the oldest in the company, actually, and the company was born in 2018, so it's pretty young company compared to other crypto exchanges out there, also bigger than us. But anyway, I'm in charge of the business development and also on the B2B side, also to helping companies having their first steps into the maybe baby steps, let's say, into the crypto world. This is the year of institutionals. This is the year where a lot of big institutions are actually coming to cryptos. They are talking about cryptos, and despite this, I hope they will continue also after some problems such as Terra Luna crash and also the FTX crash. But anyway, it's something we can overcome in the future. Our main goal as a company is to building the leading European crypto primary account. What does it mean? It means that we have a European vision, even though we are Italian, even though we have 1.5 million customers here in Italy. We are opening in France, we are opening in Spain, and we just closed a 16 million round led by Azimut Investments. We have United Ventures, also Banca Sella, which means that institutions are also investing into this kind of technology. But why young? Because we want to be the crypto primary accounts. We want to bring a lot of services. We want also always with the customer in mind. Also, past panels were talking about how in financial services you need to put the customer at the center to protect the customer, and that's why even though it was a bit risky at the beginning, we decided not to have short positions. We decided not to give leverage positions, even though in 2018 could have been something against the business, but we wanted to be always compliant and always on the customer side. And the other main pillars, along with compliance, is education. We really love education. We love to educate people. We love to talk about blockchain, cryptos, so people can trade only after being accurately educated about this technology, which is really powerful on one side, but also really hard to grasp on the other side. Are we in a good timing? Maybe yes. There are 420 trillion assets on what we call the traditional finance that we want to convert, or at least to translate into new crypto finance. Cryptos are a very powerful and interesting digital asset class, let's say, and so we really have a lot to do, a lot to discover again on this asset class. But our numbers are talking. This is also updated on the 1st of June 2022, but they are increasing. So we are 1.5 million actually, and which means that our community is eager to know more, is eager to understand more about this asset class. And I would like just to give you a brief introduction to our ecosystems. We are smaller than the other companies here, MdotM, Fabrick, and so on, but we already have 4 different products we want to talk about because they are really connected to each other. They are really working well together. Young Platform starts with Step. Step is our first application, and it was pretty simple concept. You just walk and you earn cryptos. So every step you take, you are one step closer to earning your first cryptocurrency, which is a Young token. Young token is a utility token, so which means that it's useful into our ecosystem. And it's not only about walking, but it's also about learning in a gamification way. And also in the past panels with Bank of Italy and so on, we were talking about how learning through gamification tools is really, really far better than just reading stuff, okay? And also, we're not talking about only about gaming, but also about videos, short videos, Reels, YouTube videos, Instagram Reels, really everything to reach our young target, but also older people. We really had also to talk with Giovanni Mucciaccia to explain cryptocurrency as a blockchain to make it really simple and easier for everybody. So go just to YouTube to check it out. And the educational content is also inside our STEP application. And after learning and knowing more about blockchains, usually our customers, they just want to trade them, to hold them, to buy them. And that's why we have our core business, which is Young Platform Exchange. And they're only after having your KYC done, only after you, every process of anti-money laundering is passed positively, let's say, you can start trading, all in that moment. And also Fabrick is helping us. For instance, we are embracing the best technologies we have in Italy to give you virtual IBANs, to give you the possibility to deposit. And here we come also with some hints about how we are using data, because what you see here looks like really simple, what you see here looks like really safe, but of course this comes because we have great technology behind. We're trying to hide, we're trying to put under the hood. What does it mean? It means that, for instance, just to give you one simple example, in a centralized exchange such as Young Platform, every transaction coming from the blockchain, and blockchain is worldwide, okay, so it's just not the Italian blockchain or the European blockchain, it's worldwide. So every transaction coming is assessed with a risk scoring coming from Chainalysis, which is one of our providers, is one of the main expert in analyzing on-chain data. And so here we come to the data part of what we are doing, at least one of the many ways of using data, which is risk assessment. So every transaction is assessed. For every transaction, we have a metrics to measure if it's risky or not, and which means you can have your crypto safe in our exchange. You can be sure that any kind of transaction coming is assessed and leveraging on-chain data, but also leveraging our internal data. So we have two different kind of data, which is the centralized data we have, since we have a centralized exchange, so we have databases and so on, connected, linked to the on-chain data, which is out there. And it's far more, I would say, interesting, because we didn't have this kind of data before. So we are building a lot of tools to try to assess if some transactions are dangerous for our users. Then we have the Pro platform, but it's just for pro traders, such as our friend MdotM. They want to do pro trading. You can go to the Pro platform, that side. And why we're building this kind of ecosystem? Because, again, we are really focusing on compliance on that side. We want to be sure that your cryptos are safe. That's why we have the best-in-class custody provider, which is Fireblocks. And we are a tech company, so in our core tech stack, there are the best providers from, again, Chainalysis, Fabrick, and so on. And again, community is really, really important. Every time you're talking about cryptos, every time you're trying to build projects on the Web3, or at least as a centralized exchange, we want to bring people to cryptos, you need a big community to leverage, to educate. And just really quick on the B2B side, we are building this a very interesting value chain, because we want to put ourselves at the beginning. So you're a company, you want to do crypto projects, but you want to do, you want to be compliant, you want to be safe and sure. Then you can open a business wallet to Young Platform, which means that you can handle crypto assets in a secure way and fully compliant with Italian regulators and fully compliant with European regulators. And that's why even if you want to build your really small NFT projects, you still need kind of a bank account of cryptos, which is something we can provide to you. Even though you are a platform, for instance, you can use our services, which are API open, so you can connect with APIs and trade, convert, and also take full control of your business wallet. And just to give you an idea, here with our partners, you can build end-to-end projects, and also leveraging the powerfulness of data on-chain and off-chain. With our business wallet, you can build all the projects you want, from buying cryptos to selling NFTs or using NFTs for other reasons. And that comes with the last two points. One is governance management, which is important because if you want to use cryptos, you need to be sure who is using cryptos inside your company, how they are using, because private keys are powerful, blockchain is powerful, but with those powerful tools, you need to have control over them if you're a company, And the last one is the euro-only account, which means that you can share your wallet address and receive cryptos, but you will see only euros because they will be converted, instantly. And yes, this is more or less a brief picture of what we are doing and our position on the value chain and our responsibility as the leading Italian crypto exchange.
Thank you, Edoardo Innocenti, for this great presentation of what you have done. I have already a question about, you said you're able, thanks to the chain analysis, to reduce fraud and identify potential risks.
Correct.
On the other, and you're very much focused on compliance. On the same topic, I would say you have an opportunity that on normal exchange of stocks, it's not that easy to do. Mm-hmm. So it's to track investors, to track people that purchase and sell and connect them on time. This crypto. So how do you manage this with data protection, and how do you work on that to be fully compliant?
This is a really big challenge because our position is not easy since we are really at the forefront between Web 2 and Web 3, which means that we are mixing centralized data and decentralized data. And really, we can do this leveraging powerful tools that we can gather from the market, from our providers, which are usually dashboards that can really giving the address of a wallet which is unique in the blockchain. Depending on the blockchain you're using, of course, we can know all the history of all the transactions that pass through that wallet, which means that we have always updated a blacklist of all the wallets. So, for instance, if somewhere in the world, some FBI, CA, whatever intelligence company, if they discover that some wallets must be blacklisted because they belong to some terrorists or bad actors out there, we can know this. We know this, and then we can really with a high accuracy have these risk assessments for each wallet and also now for each NFT. So even though you get some NFTs, sometimes you can get NFTs from you don't know who actually, because you see transactions on the blockchain coming from one public address to another public address, but you know really nothing about those addresses. With those tools, we can look through all the history of all transaction, also many degrees you call degrees of separation, kind of. If you're building a network, if you're building a graph, you can see these many degrees ahead. What happened in the past? If something is coming from those blacklisted wallets, you will know for sure. And then we stop everything, and then of course we start talking with authorities, who, by the way, we are also helping to understand better this technology. So mainly we use tools that are really helping us going through the intricate and difficult on-chain data.
So crypto exchange, it appears at the end to be more transparent and more compliant than the normal stock exchange in some way. But
Yeah,
It appears. I mean, what he's saying. But that was very provocative. Of course,
it's provocative, but actually, I want to give you some examples because if you go to, let's say, if you use technology, okay, technology doesn't always mean transparency, because if you go to Poste, for instance, it's pretty well known who is the next in the queue, right? But now they came with this beautiful application where you can, book in advance and go to the Poste. And all the people hate you. Yeah, they hate you because they don't know actually what's going on. But maybe someone could also say that maybe someone hacked the system, and maybe you are, someone is making you a favor, to pass before others. So technology is not always transparency. Sometimes it's opacity. Instead, here on the blockchain, if we had kind of a smart contract, which is publicly, but everybody can see it. Is it working? Yeah, everybody can see it. It's actually a good way to be transparent. And also, I can give you another example. If you look at the Terra Luna crash, for instance, okay, and the FTX crash, they are completely different crash. Even though people are actually saying, yeah, there are two crashes into the market in the last months, but actually they're completely different, because on the Terra Luna is something that there was more transparency compared to the FTX, where actually there was no way, to knowing what they were doing inside the decentralized exchange. But yes, just to give you a small flavor of the difference.
If I die and I know why I die, or if I die and I don't know why I die, I still die.
Yeah, but actually, it's not 100% correct on that side, because if you know what's going on, yeah, you can actually improve or prevent what's going on, or actually you could see what's going on. On the other side, it's really hard to do.
Crashes have
But
occurred
yes.
over time, also for normal exchange and financial markets over time. So, I agree on the fact that a crash is a crash, but still understanding what was the reason for it, it really helps. Transparency in this way, it's a challenge somehow. Yeah. You may see the big whales before when they move. So on one way, you can reduce what could be the volatility. But still, we have another question from the floor. So from the European Central Bank. So.
No,
tough question.
These are my views, and I put the disclaimer, as Oscar knows very well, every time we need to intervene. Two questions. First, I think one of the main foundation on which, for instance, stock exchanges work over the year, and why they work, and we are still keeping them, is trust. Trust from the customers. So as a new player in town, how you build trust? First question. Second question, let's say from an angle of a regulator with MiCA in town, but in general, how, let's say, I see always the regulator perspective, but from the market player, how you follow the regulatory developments, how difficult they are to follow, especially when the law is still in the making, but still that something massive in your compliance regime is about to happen. How costly it is, how keep you awake at night, meaning like how you how you work on that, how you try to lobby, how you try to prevent what's going on and what will happen in the law.
Yeah, absolutely. And those are both two very, very good questions. And the first one about trust is usually it comes through our services, our 100%, let's say 360 degrees way of talking with our customers. So every difficult moment we had to, because if everything is going well, it's pretty easy to have trust, right? So trust is something that you can build on when you have difficult moments. And we have a constant communication with our customers. So we always try to protect them, giving, also in the Terra Luna crash, we were asking our customer to close their position before it was too late, even before some other exchanges. And we are always monitoring the situation of all the cryptos we list, and we have strong due diligence process before listing some cryptos. For instance, FTT token was not listed on our tokens, in our exchange, so nobody, really zero, of our customers was actually hit by the crash of FTX, and I think this is kind of a way of building trust on that side. So the answer is mainly with huge, strong procedures, huge, strong due diligence, best providers in class, and strong communication. On that side, all our customers can see that we are at least ahead compared to our competitors or our services out there, and yes, this is mainly what I think could be an answer.
For instance, do you have a dispute resolution regime within your compliance team, for instance?
Sorry,
Dispute resolution.
Oh yes, absolutely. Yes, we have. That's also one of the main advantages of being, an Italian company, answering to all our customers, so they can reach us really pretty easy, and we follow them through all the resolutions we need. And also we are told.
But I mean, the question was not on the customer care, more on the dispute resolution tool. So like a way to solve conflicts before they head to tribunal, and so.
For instance. Frauds.
Absolutely.
Push frauds, for instance, or this kind of that happens.
Yeah, we're trying to prevent, of course. So prevention is the main way. Is the main way. But actually, yes, because we have a team which is completely dedicated to that, and it's the same team that is also using all the dashboard and all the tools coming from Chainalysis, for instance, and it's really hard sometimes, of course, because it's not easy. Also talking sometimes with authorities, because we have to explain what's going on. We have to explain why we cannot get back some transactions, for instance, that are on chain, of course. But the answer is yes, and we have a dedicated team for that. And also I encourage to have a look online to the Chainalysis and YAM platform use case that we publish with them, which is a good way to have a picture of the relationship between we and Chainalysis. So actually, yes.
Very lively discussion, so I'm very happy for all these questions. And I want to leave now the floor to Alessandro Di Pietro of Aindo. We discussed a lot about personal data, the problem of sharing them, ensuring the protection of the individuals. What's coming out from the technology to help us protect the data subjects?
So good afternoon, everybody. I'm Alessandro Di Pietro. I'm responsible for business development. I'm sorry that it's late and I'm the last one. I know it's after lunch, but I'll try to make it very, very quick. So this also gave me the possibility to listen to all the previous panelists and all the things that have been said. It provides me also a huge background on which to start this brief introduction of Aindo and who we are and what is the problem that we are trying to solve in a certain way. So we are, of course, a way younger company compared to the previous one that has preceded us, but we share with all of you, I think, the same pillars on the fact that for making good wine, there is a need of good grapes, so, and I know Carlo agrees on this. And so to make good AI, we need very, very good data, good quality of data. And the most of the time, the data that we can access and that we can use to develop AI and machine learning based system are not that level of quality that we would expect, and of course we can also sometimes not have the access to those data. And this missing, let's say, link between the all the data that are produced nowadays from transactional operation, but also from IoT devices generation, is due to, first of all, to the let's say, very stringent and way more stringent regulation based on data protection, but also for a lot of other aspects that we have learned to be impeding the diffusion and the spread of AI models into the industry in general. Those we discovered this while we have started as Aindo in 2018 when we were basically a consultancy company that was helping other companies and organizations to leverage the power of artificial intelligence. And the biggest problem that we had was the accessibility to those data by starting from the fact that it was not really easy to get physically the data because of the way of transferring and sharing those. But of course, we also noticed that there was a lack of standard, not only in the sharing formats, but also in the way that those data were stored and also formatted. So we had huge amount of data that were PDF and there were not tabular data, which are the standards that can be then processed and from which we can derive information. Therefore, we envisaged a solution that was not passing through the real data to which we couldn't have access. And this was the first step to make the platform that today we are developing and finalizing. This is based on what is so-called today synthetic data. And synthetic data, just to give you a brief introduction to it, are basically, it's not very good to say it, but it's a fake data, so artificial data that are coming from original data set, of course, so they maintain all the statistical distribution and information that is contained normally in a normal data set, but they eliminate all the relation and all the re-identification issue to the original data set. So it will be always impossible to go back to the original data if there is not the knowledge of the model that has been used for developing this synthetic data set. There are different ways to create synthetic data, so also simulation data, the one that we use for developing, for example, components and for normal R&D activities are also synthetic data, but what differentiates us is the way in which we produce this synthetic data. And this is based on a generative adversarial network, basically, and variational autoencoders, which are AI-powered themselves, model that can learn the information under a form of probability distribution, and then regenerate a total different data set that will contain only the information that are very, very useful to know, for example, only for doing simple data analysis or using the data set to train other machine learning methods. Of course, after the generation and during the generation, what we had to pay attention was to prove that the synthetic data generated were useful as the original one, and that maintains the privacy concerns that, of course, are regulated by GDPR or CCPA in the United States. We do that, and we also release a report over the goodness of this synthetic data, and therefore synthetic data has been now recognized as one of the most promising PET, so privacy enhancing technology, that are on the market, because what we were discussing also before, the source of the data is of course important, so whether we can get those data, and for now, the only way to gather data that can be used for high-scale machine learning model training must be in some way anonymized with standard techniques that, of course, is based on the, let's say, trade-off utility versus preserving privacy. So if, for example, we want to get a lot of data, we will always have to destroy some of the information to guarantee the privacy that must be granted at this point in time. In this way, the trade-off is really high, so it's impossible, as I said, to go back to the original data, and there are techniques that, of course, guarantees that all the data points at granular level will not resemble in any way the original one. This is what we want to propose as a new standard, a new incoming standard in privacy enhancing technology, also pushed by the fact that synthetic data are usually better than any other, or even the original data, because original data, for example, can have with them biases, they can carry biases, they can be not enough, simply. So this is an additional feature of the way in which we can generate synthetic data, which guarantees, if it's wanted, that the biases contained in the original data can be deleted, and therefore granting also a more transparent way of having a data set on which learn additional machine learning methods. And of course, it gives also, let's say, a layer of explicability on all that is AI, which is important, for example, because if we want to guarantee that a machine learning model is explainable, we need also to replicate its functioning and the way in which it has been trained. And that means also providing the data set with which we have learned this AI model. And this is not possible because even within the same company sometimes and within different business units, it is not possible to share the same data set that has been used, for example, to train an AI model. This is simply because of regulation on privacy, because the secondary use of data is not always given for granted for additional studies. And the only way to do it is therefore providing the same kind of information, for example, under the form of synthetic data, which anyway, as a good sign from also the market, is considered to be by 2030 the main source for the training of the next generation machine learning techniques. We didn't stop on the synthetic data generation, even though it's already some big achievement. We have also, in the latest days, produced an article in New Rips that is now been in this really moment discussed in Orlando from one of our most talented AI and developer. We wanted to go forward also into solving not only, let's say only, the problem of the secureness of this data sharing, but we wanted to provide an overall tool that could enable organization to, let's say, leverage fully the power and the information that is contained in their own data. So we have developed a platform which is mainly built by 5 modules that will tackle each of those phases in which we saw a potential value emerging from data elaboration in general and processing. So from the acquisition of data through from the various type of database, through it's mainly a connection module, through the structuring of the data, so very easily saying the translation from PDF to tabular data, which is the main kind of data that our synthesizer can process. The secure module that will synthesize the data and will assure that all the tabular data will maintain also relational characteristic, and then will be also representative of time series, which is very important into financial sector especially. And the last 2 modules, which will then enable in only one solution the possibility to do data analytics, and in longer run, of course, also developing new machine learning models, and of course also to be able to share with a certain standard and with, of course, the right level of secureness, the synthetic data that will be generated by the platform. So in financial application, we see, of course, one of our let's say most hot sector, because the financial data, of course, and the financial services produce every time huge quantity of very complex and personal information, and it will be always very important to guarantee that all the new models and all the new services that we will base on AI will be explainable, and that we rely on the good quality of the data. But also, because with synthetic data we can approach also data scarcity. An example could be the development for fraud detection models, in which we hope, of course, that these kind of transactions will be limited in number. Therefore, to train a model to recognize those kind of activities, there will be the need, for example, of data augmentation, which is another aspect that can be covered by synthetic data. And of course, also approaching the problem of data cost, because for having and for traditionally anonymizing those kind of data, the process is very, very long, it's very, very costly, and with the synthesizing those data, the process is instead mostly automated. So let's say that we have also other use cases, but I think that we can take some question if there's any.
Thank you very much, Alessandro, for this introduction of the synthetic data solution. It seems like that there is a perfect combination of the startups that preceded you and this type of technology in order to gather even more data and to make them available. I leave to since it is already 4 o'clock, I leave to the floor if they have any questions on synthetic data. Yes.
I do have a question, and as I have the mic with me, I will be the first one, but if there are other questions, just let me know. I'm extremely fascinated by this concept of synthetic data, but because in theory, they will allow you to avoid a wide array of troubles and legal problems that many companies and startups are facing nowadays. I mean, Carlo knows it much better than what I do. But then I'm wondering, what's the problem with synthetic data? There must be a problem, right? Otherwise, everyone will be already using them. So that's my question.
Thank you for a great question. There is the one single problem is generation, is secure generation of this kind of data. Of course, the way I put it is very simple, because I'm not the one that is really developing the algorithm that is the base of all the platform, but it's no easy task. The team is composed mainly of all PhD or ex-PhD or engineers that are doing right now their PhD to develop those kind of new solution, because there are a lot of problems. For example, there are also a lot of other companies, not really a lot, but a certain number of other companies that claims that they can automatically generate synthetic data from any type of data set. This is really, really difficult, because as I was saying before, it's not only about the nature of the data from we are starting to generate them, so all the kind of attributes that are inside a certain data set, but also to guarantee, for example, the relational database will maintain the same relationship, the keys between different data set, for guaranteeing time series that will be consistent between real time and synthetic data. And of course, there is also a matter which is more, I wouldn't say political, but to prove that that this technology is worth it and is secure. So there are ways, and there are also a lot of papers now that are demonstrating and validating the process on a mathematical level. So it can be proved that the way in which is generated the synthetic data can go in one side but not on the other direction, because of the assumption that we start in generating synthetic data. And also the European Union has released a report in which they assessed that, for example, synthetic data are not essentially PII, so personal identifiable information. So the way in which we are moving, it's that one, to accept this kind of new technology, but it's a long way to complete validate everything.
Yeah, it seems like that it is counterintuitive, the idea of using fake data to make it more real, to make it more accurate, the response in terms of the analysis of data. and this is one of the challenges. The other challenge is, in my opinion, the difficulty to find the right trade-off and right equilibrium between the trade-off between protection and on the utility of the data. So the more there will be enhanced the protection of the data subject, the less useful will be the data. But it was really an interesting journey, the one that we did this afternoon here, analyzing different business models based on data and different types of data that are becoming essential in the European scenario. So thank you very much for all the panelists for being here, and for the audience to be until the very last, very much interactive. Thank you all.
Thank you very much.
Thank you.